What's up, guys? Welcome back to another episode with AB Investments. I have some good news to show you guys, but I would have to do that on a live. Will most likely will be either tomorrow or the day after, but it has to be very quick so you guys can see exactly formulate. Um, the good news about it is that when I show it to you on the live, it's going to be as far as for technicals, and that's the good news for AMC as well. Let's make sure that that's understood. Like I said, most likely tomorrow, uh, if not day after tomorrow at the latest. But we will do that live. I'd rather show you than just tell you. You guys will see it, and hopefully, you guys will be just as excited as I am. I feel like there's no doubt, but you will be excited. But I will show it to you, like I said, tomorrow. Now, with that being said, today I want to cover the important stuff that happened currently just today and overall on the macro level of the whole economy. We had the CPI data being reported, and while the sentiment was great and it looked like, inflation is going down, it really isn't. The core inflation is still up 0.2, and it's especially the food and the renting aspect of the market or the economy is actually not good at all. So what a lot of people, you're probably going to ask me, like, well, AB, I'm confused. Like, there is, like, look, we're in a bull market, at least quote unquote what they say. However, we hear or we seeing so many problems and cracks within the commercial uh, real estate market. And yes, that is true. And we see that the true inflation is really not, has not brought, was not brought down. And that's a reality as well. How's the stocks going up and they're saying we're in a bull market while reality is not? Here's the thing. You got to look, one, and on history, and two, you got to look at the data. Two, we'll start with two, which is the data. When you see these prices like the S&P 500 or even the SPY being at almost every other day now is making a new 52-week high, we're seeing that Nvidia and the chip and the tech stocks are basically making that roar, and they're saying that we can compete in the $1 trillion industry, we could stay in the $1 trillion market cap and all this stuff and all that noise. And then Tesla being moving up, almost creeping toward a 52-week high as well, creeping toward it. They're about 50-60 bucks away from that. But with the way that it's moving, you're talking about on the same way of moving like this. If it continues, if it keeps it up for another week or two, then they'll be there and perhaps even break that. Now, here's the thing. Again, since I'm not a financial advisor, I'm not telling people to go buy calls on Tesla and buy whatever calls on Nvidia or even anything, or even when to buy or sell or do anything. What I say is my opinion. You guys do with it as you see, or as you see fit. Do your own due diligence, of course. Now, the the fact that the market being at these prices, normally everybody is right now saying that the reason why this market is like this, and this is this is actually why the market has been behaving like this since the midway of last month, is because they're incorporating in the idea that the feds will stop rate hikes, will pause it. And that's why so far the market have been already incorporating that in. So on the day of, if the feds come out and say, well, it looks like inflation is being tamed and blah, 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 we're going to go ahead and put a pause on the hike rates. If they do the opposite and continue at least one more, then you will obviously see a market that has incorporated all these gains, and it will do some sort of form of correction. Now, if they do actually go ahead, and this is the interesting part, if they do go ahead with the pause, it's a very interesting scenario for us and like everybody in the market in general, not just AMC and not just meme stocks. But the reason why I say that is because when they pause, they can't come back and raise again. So, for example, if a patient goes to the doctor and the doctor prescribes them medicine for a certain illness, the they have to go through the cycle of taking that dosage, and they have to continue going accordingly until the illness is no longer there. And that's when they can pause the medication for whatever it is. Now, if they pause and they stop early for whatever reason, because you got to remember the feds are always in reaction mode to the data, and the data is so delayed behind, which in my humble opinion, insidiously they know that stuff, but they're playing the kind of like the Fifth Amendment role. Like, oh, okay, well, I'm not gonna comment here. The economy is so delayed and data is so delayed. We're just behaving or reacting based on the data that comes to us from month to month. So if they pause, they better make sure that it's the right decision. If it comes out a month after that inflation rised again, then that creates an issue because they can't rise again. If they start hiking again, then, which again, that have not happened before, at least to my knowledge, or since I could remember, then that would break definitely everything. The system would totally collapse at that point, because you can't just stop and then now go right back to it and start hiking again. So normally the ways that it works, as in you hike, as they've been doing for the last year, leading up till now. And then whenever you get to the point of they see that it's done its purpose, they pause, and then they let that work its course, and then they start taking or bringing down rate hikes. So they start taking down, and then they start their easing, of and letting off their balance sheets and all that stuff. Now, how will that work out? It's going to be a nightmare. This whole play is in my humble opinion, like very. It's kind of like an unjugulable play. You can't even get a clown to juggle all these balls that these guys are juggling right now. And obviously, in my humble opinion, I think they know all that, but they're letting the process work its way out so that when it does happen, everything is in play for the ultimate, what I think is the ultimate crash overall in the end coming to it. Now, that doesn't mean it's going to happen tomorrow. It doesn't mean it's going to happen in the next month or two. These things need time to work itself out. So, especially with raising the debt ceiling until 2025, doesn't mean that we will crash then or after. It doesn't mean I'm projecting this, but I do project personally that we will have a major downward economical breakdown toward the later end of this year. And I'm not the only one that's saying this. Like, Buffett knows this, Dahlia knows this, economists all know this. Right now we have all the material for the perfect storm, waiting for the perfect storm. And when that perfect storm happens, it's only a matter of time before things go bad. Let me explain to you why banks are even breaking up. People are saying to me like, "Hey, so why did this bank break and why did that break?" I've explained this before, and we will do it I'll do it in a different way this time, so maybe perhaps everyone else who didn't get it can understand it. The thing is, with the liquidity crunch, everybody's afraid for their money. The first time the first bank got screwed, which one? SVB. And then when that happened, before it even happened for Signature, and then the ones after First Republic, the thing is, you got to remember is people were taking their money out from the smaller banks and taking them and depositing them in the bigger banks, like one of the 4, 5, 6 bigger banks, because it's a safer place to be, because they're too big to fail entities, and the feds made it clear that they're going to back them up, and that's just the reality. Now the problem is, since late 2020, early 2021, when the feds had easy money policy and banks had damn near 0% policies on loans and mortgages, imagine people going to the bank, opening up a 30-year mortgage at a 1 to 2 to 3% rate, which was probably even less by then, back then. But let's just say, for the sake of argument, that it was like around 2.5, 3% fixed rate, 30-year mortgage. Now you're stuck making that payment. However, what the bank did is they goes to the Fed, get the money, pay the Fed its money. They already incorporated the fee that they will make and what they will pay on that money to the Fed itself, and then they'll give you your home. You go about your business. Now, as time progressed, imagine that only a year later, like the Fed started hiking rates, and over the course of a year and a month, now we're at 5.5, which is about 500, 525, almost 550 basis points, which is the amount that the Feds is charging those banks, or the people on that, the banks, to get money from them. So when you're basically making back your payment at a fixed rate of 2.5, whatever, 3%, the bank is already, with repo and reverse repo and all this stuff, their bank is already losing their asses off on these long mortgages and these long, far outdated transactions that right now, like, even if you're making your payment, they're already losing almost double on the fees that they're paying back. So that's why that, add to that nightmare, add money withdrawals, bank runs, when people were making bank runs to go from there and go to the bigger banks. What technically happened, or naturally happened, is that even though the bigger banks are also in stress for all of this, but what is giving them a fighting chance for tomorrow, so like they're losing today, but they're trying to survive till tomorrow, is the fact that majority of the people are making bank runs on the smaller entities and then taking that money and putting them in the bigger banks. And of course, plus all the market manipulations and transactions that they're involved with. That's the bigger entities. The smaller ones couldn't survive that, and they still can't survive that. We still haven't seen nothing. There's still more on the horizon, as I think. Now, with that being said, hopefully that gave you a lot more intel on what's to come and what to expect. And if you have any questions, please put them down in the comment section. As always, I can't wait for the next live to show you guys the good news for AMC. And with that being said, much love, AB Investments.